Assalamu alaikum viewers, we are in the fifth lecture of English version accounting series. I am Dr. Safdar Husain Tahir, Associate Professor, Lalpur Business School, Government College, University, Faisalabad. I did postdoc from UWA Business School, the University of Western Australia. We have already discussed the five different transactions. We have already debited and credited in the previous phase. Now in this lecture we will discuss another five transactions. These are the next five transactions. In the sixth transactions, we purchased a building of 12 lakh rupees and paid cash of 8 lakh and account payable of 4 lakh. The building increased from 0 to 12 lakh, that is adapted. The cash decrease whatsoever the cash level is of 8 lakh, that is a credited. Account payable increase 4 lakh, that is also a credited. Similarly, in the seventh transactions, in a seventh transaction, we purchase a computer. These computers of 90,000 rupees on cash. So the computer increased 90,000, which is debited, and the cash decreased 90,000, which is credited. In the eighth transaction, we purchase a security system of 50,000 rupees. The security system increased 50,000 rupees, which is debited, and the cash decreased 50,000, which is credited. In the ninth transaction, we purchase a shop shelves and display unit of 1,20,000. So shop shelves and display unit increase 1,20,000 and the cash decrease 1,20,000. In the 10th transactions, we have an inventory, and this inventory of we purchase an inventory of 6 lakh rupees. So the inventory increase, that is debited, and the cash paid 3,50,000, which is credited, and the account payable of 2,50,000. Then we add all debit, which is 55 lakh, which is which is 5510,000. 5510,000. Total debit is equal to total credit. This is very important. This is the first check of journalization. When you journalize the transaction, you must check whether the total debit is equal to a total credit. So the total debit is equal to a total credit. We add up all the debit values, and here we add up all the credit value. Thank you so much for this lectures.